I want to bring in right now from Capitalist Pig, Jonathan Hoenig, to talk about market reaction to all of the events we've seen. Good morning, Jonathan.
Great to be with you, Cheryl. Good morning.
Yeah, you know, it's funny because we were looking at predictions overnight of financial turmoil if things went badly for Theresa May. You did have the British pound down about 2%. It actually has come back a little bit, and the stock markets seem to be holding up here and across the pond. What's going on, Jonathan?
We were waiting for another political shoe to drop overnight, Cheryl, but it really hasn't, as you pointed out, despite some weakness in the British pound, which has really remained kind of localized. You haven't seen a lot of major movements in the other European currencies. The stock market continues to hang in, and certainly has in the U.S. Yesterday, about 260 new 52-week highs, about half of that in terms of 52-week lows. And stocks, by and large, continue to do well. Citigroup, new high yesterday. eBay, Facebook, Delta Airlines. And even in the U.K., despite, not unlike here, a lot of political turmoil and a lot of political intrigue, the U.K. stock market, not too far from its 52-week high, its all-time high, excuse me, not like ours here at home as well.
Glad you pointed that out. By the way, the NASDAQ hit its 38th record high of the year yesterday. But as far as European investors are concerned, do you think they factored in the element of surprise could actually happen after we saw the U.S. elections and the Trump victory and the Brexit vote?
I think they have. You know, so far, nothing has seemed to shake European investors and global investors as well. They look all around the world for the top performing investments, the places that are the safest to put their money. And still, when you're taking a look at equities, which are still reasonably priced, maybe not so much the high-tech names, but most equities are still reasonably priced. It seems to be a pretty appropriate investment as against government bonds, including UK gilts, which are still paying quite small returns in terms of interest rates. So equities not overvalued, not too overloved, and I think that's why the political turmoil, they still remain the #1 investment.
Well, but Jonathan, you know, here's the next shoe that is supposed to drop, of course. That is Brexit negotiations beginning with the European Union. All of this political turmoil, of course, could have a negative effect on the British economy, and that could affect us here. We're going to have to start from scratch on these trade agreements when and if Brexit actually happens with the wheels in motion. All of this seems to make that more uncertain, and I know investors don't like that, especially American investors, Jonathan.
That's just it, Cheryl. I think one of the big risks right now is political, particularly when it comes to trade. Tremendous amount of trade from the free countries around the world, the UK and the Eurozone, of course, a big part of that, as well as the US. So if there's a massive change in trade policy, I think you could see some of those shoes, if you will, begin to drop. And you've already started to see some worrisome signs when it comes to the market and global trade. You know, oil has just fallen off the side of the cliff these last couple of days. That's somewhat of a negative harbinger for further growth, but so far the stock market remains strong, even in the much troubled UK.
All right, Jonathan Hoenig, thank you for your perspective this morning. Of course.